The stock market today is a complex tapestry woven from economic data, corporate performance, and global events, constantly shifting and presenting both challenges and opportunities for investors. Understanding its current pulse requires looking beyond daily headlines to the underlying forces shaping its trajectory. The dynamic pulse of global equities. The stock market, in its essence, is a barometer of economic health and future expectations. It's a vast, interconnected network where billions of dollars change hands daily, reflecting collective hopes, fears, and analyses. For many, stock market today conjures images of flashing screens and volatile numbers. But beneath the surface lies a sophisticated ecosystem driven by fundamental economic principles and human psychology. What we observe in the market's daily movements is a real-time aggregation of countless individual decisions, influenced by everything from geopolitical tensions to a company's latest earnings report. This constant flux means that yesterday's trends may not hold true for tomorrow, demanding continuous vigilance and adaptability from participants. Currently, the global equity landscape is characterized by a fascinating interplay of resilience and uncertainty. Despite persistent inflationary pressures and a tightening monetary policy cycle from central banks worldwide, many indices have shown remarkable strength, often defying earlier pessimistic forecasts. This resilience can be attributed to several factors, including robust corporate earnings in key sectors, a surprisingly strong labor market in major economies, and the ongoing technological advancements that continue to drive innovation and productivity. However, this strength is often punctuated by periods of heightened volatility, reminding investors that the path forward is rarely linear. The sheer volume of information, from economic indicators to company-specific news, contributes to this dynamic environment, making it a challenging yet potentially rewarding arena for those who understand its intricacies. Navigating the economic currents. One of the most significant forces shaping the stock market today is the ongoing battle against inflation and the subsequent response from central banks. For the better part of the last 2 years, economies have grappled with elevated price levels, prompting aggressive interest rate hikes from institutions like the U.S. Federal Reserve, the European Central Bank, and the Bank of England. These rate increases, designed to cool down demand and bring inflation back to target levels, have a direct impact on corporate profitability and investor sentiment. Higher borrowing costs can squeeze profit margins for businesses, making it more expensive to expand or refinance debt, which in turn can dampen future growth prospects and valuations. Moreover, the forward guidance from central banks often dictates the market's immediate direction. Any hint of a pause in rate hikes, or conversely, a signal that more tightening is on the horizon, can trigger significant market reactions. Investors meticulously analyze every word from policymakers, attempting to forecast the trajectory of monetary policy and its implications for various asset classes. Beyond interest rates, other macroeconomic indicators such as GDP growth, unemployment rates, and consumer spending figures provide crucial insights into the underlying health of the economy. A robust economy generally supports higher corporate earnings and, consequently, higher stock prices, while signs of a slowdown or recession can lead to market downturns as investors brace for potential profit contractions. The delicate balance between controlling inflation and avoiding a severe economic contraction remains a tightrope walk for policymakers, and the stock market reflects this ongoing tension. Corporate performance and sector dynamics. While macroeconomic factors set the broader stage, the true engine of stock market performance lies in corporate earnings and individual company fundamentals. A company's ability to generate profits, grow its revenue, and manage its costs is ultimately what drives its share price over the long term. Quarterly earnings reports are critical events, offering a snapshot of a company's financial health and future outlook. Positive surprises can send stocks soaring, while disappointments can lead to sharp declines. Irrespective of the broader market trend, these reports provide tangible evidence of how businesses are adapting to the current economic environment, whether they are successfully passing on costs to consumers or struggling with demand fluctuations. Looking at sector dynamics, the stock market today reveals a fascinating divergence in performance. Technology and growth stocks, after experiencing a significant correction in the previous year due to rising interest rates, have shown signs of a strong rebound, particularly those involved in artificial intelligence and cloud computing. Innovation continues to be a powerful catalyst, rewarding companies that can disrupt existing industries or create entirely new markets. Conversely, sectors like traditional energy have seen volatility, influenced by global supply dynamics and geopolitical events, while consumer discretionary stocks often reflect the health of household spending and consumer confidence. Healthcare and utilities, often considered defensive sectors, tend to offer more stability during uncertain times, appealing to investors seeking lower risk. Understanding these sector-specific trends is crucial, as different parts of the market respond uniquely to economic shifts and technological advancements, creating opportunities for diversified portfolios. The psychology of investing and future outlook. Beyond the numbers and reports, investor psychology plays an undeniable role in shaping the stock market today. Fear and greed are powerful emotions that can drive irrational decisions, leading to market bubbles or panic-driven sell-offs. During periods of optimism, investors might overlook risks, pushing valuations to unsustainable levels, while in times of pessimism, good companies might be undervalued as fear takes hold. This emotional component often explains short-term volatility and market overreactions to news. Experienced investors understand the importance of maintaining a disciplined, long-term perspective, resisting the urge to make impulsive decisions based on daily market swings. They focus on fundamental value and strategic asset allocation, rather than trying to time the market perfectly. As we look ahead, several key themes are likely to continue influencing the stock market. The ongoing integration of artificial intelligence across industries, the transition to green energy, and the evolving geopolitical landscape will all present both opportunities and risks. Companies that successfully adapt to these megatrends are likely to thrive, while those that fail to innovate may struggle. Furthermore, the global economic recovery, while uneven, continues to unfold, supported by resilient labor markets and, in some regions, robust consumer demand. However, potential headwinds such as persistent inflation, the risk of recession in major economies, and geopolitical instability remain factors that could introduce volatility. The stock market is a forward-looking mechanism, constantly discounting future events, and its current state reflects a complex blend of these anticipated challenges and opportunities. In conclusion, the stock market today is a vibrant, complex, and ever-evolving entity, shaped by a confluence of macroeconomic forces, corporate performance, technological innovation, and human sentiment. It demands a nuanced understanding, a disciplined approach, and a willingness to adapt to changing circumstances. While daily fluctuations can be dizzying, focusing on the underlying drivers and maintaining a long-term perspective remains key to navigating its currents successfully. What aspects of the current market environment do you find most compelling? And how do you believe they will shape the investment landscape in the coming months?